I think there are a couple reasons. One, of course, rising cases are very troublesome, but what's even more troublesome is rising hospitalization rates, as well as pressure on the hospital systems. Keep in mind, the goal of lockdowns and quarantines was really so that we could avoid pressuring hospital systems. We're now hearing from certain parts of the country, including Houston, parts of Arizona, saying that their hospital capacity may be limited in the weeks ahead. It's something that's concerning not only for investors, but really as a consumer in the U.S. As you're going through this reopening process, do you start to feel a little bit nervous that perhaps this virus is among us more than we think? And I think we're watching a couple of factors. One, it was interesting to see last Friday, for example, Apple shut down 11 stores in 4 states that were showing rising cases. We saw just today, Disney decided to delay the reopening of some of its U.S. Disneyland operations. And so, we're seeing private businesses start to get involved. Thus far, there hasn't been a real appetite from state and local governments to reinstate lockdowns, but we may get that going forward as well if this trend continues. And I think clearly the markets have spoken here. We've seen really since that big June 11th sell-off a couple of Thursdays ago, this trade into the cyclical reopening stories, the airlines, the hotels, et cetera, that's really taken a pause now. The leadership once again has rotated into that growth, tech, and really parts of healthcare and discretionary trade. It's been the go-to playbook really since the last financial crisis, and we're starting to see it reemerge once again.
Indeed. I mean, even though the Nasdaq did break its 8-day winning streak, that tells you how good things have been up until now, with names like Apple hitting record highs. But this is an interesting point you're making about even if we don't get a government-imposed lockdown again. At least from the federal government side, Secretary Mnuchin has indicated they're very opposed to doing any sort of lockdown once again. But you may get companies such as Disney self-selecting. You may get consumers self-selecting and choosing to stay home. So have you changed your strategy as a result? Because I understand up until now you were pretty optimistic on the reopening story.
Yeah, absolutely. Look, I think there is our longer-term view is that the reopening narrative is intact to some extent. What we have to watch, like we talked about, will there be bumps along the road? We're clearly seeing that now. I think longer term, what will really punctuate the reopening, of course, is the arrival of the vaccine. We're getting more and more indications that this could perhaps occur by late this year, early 2021. Of course, it has to be a viable vaccine. You'd have to go through the process of then manufacturing it for a mass audience. But I think over time, we will see the country reopen in full capacity, whether that's 2021 or beyond. I think that the reopening trade will come back into play at some point here, but we have to get through this period of rising cases. And I think during that period of time, we've always been favorable on what we call the long-term secular growth winners. And I think in addition to those, there are some defensive asset classes that we continue to favor as well. That includes areas like gold, like U.S. Treasuries, and even parts of the high-quality investment-grade bond market.